Dayne. Just found the next guaranteed multiplayer.
Hey man, you found another one? What is it this time?
Come check this out.
Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey guys, how you doing? It's Tuesday. Sorry, I'm getting off a little late, so I just had to update some stuff. But it's 7:30 Eastern time. Don't think we have anybody just yet, but we know they're coming. Today wasn't a great day for me personally. Just a few of the stocks I had are down, but honestly, it's all just minor stuff, so it doesn't really matter. But just looking at the overall day, and I'm actually going to go through the dashboard and the whole process today. I feel like if I just go right into the fundamentals, you kind of miss the screening process, and I'm actually behind, so I have everything from last weekend as well as from Monday, and then the open insider stuff from today up through today. So we'll update that as we go, and then we'll be able to kind of delve into each part of it, and hopefully someone gets something out of that. So like I said, looking over the day, I don't see anything that's really, nothing really looks like it's crazy. The CPI data came out, if anyone cares. It's right where they think it's supposed to be, so it's slowly cooling inflation for the, who cares? It doesn't really even matter. But anyways, so we'll go to daily movers. Let me just update this real quick. So like I said, this is stuff that moves. My daily movers are 10%. So this is stuff that moved over 10% in the last day, although like I said, a chunk of this is from the weekend, and then there's another list you'll see as I scroll down that's from Monday night. I usually take it Monday, Wednesday, and Friday, and I do open insider every day essentially. I don't know if I have to do that, but that's just how I've gotten to do it, and I feel like I cover things. There's times I miss stuff, but usually that's something I've already looked at, and I just have to have a better way of notifying myself to look at some of the stocks that start to get to a price where I'm happy with. But all right, so we'll start here. This is usually about where I'll put my screen. Normally I have it zoomed out, but for the stream's purposes, we'll keep it like this. That way I can just kind of see everything in one view because there is so many columns. But we'll go down. Let me see if there's anything. So things I'm looking at, 52-week lows and highs. Obviously, like. It's like give and take with everything. So you're looking at a high that has a huge percentage. Well, it's either down because it's trash or it's down because people are mispricing it. And the goal is obviously to always find the mispricing one, not the one that just is trash. And then I do look at 52-week lows only because I'm only going to buy with so close usually to a 52-week low. I do have values that I'll be basically lower than a 52-week low. But if whatever one's lowest, whether I value it on the low side, as in I need like a 50% return at least for where I think value would start to become, and that's with a margin of safety, or I will use just the 52-week low, and between the two, I think the value it speaks for itself. If you're going to get in that low, you already have to be confident the company's going to turn around, because you're already getting in so low. Something's got to be wrong at that point, or perceived wrong. But that's part of the point of the strategy, is that you're looking for stuff. So it can kind of get ugly. Other things I look at, just to keep things moving, revenues. I look at sales. I don't care so much about EBITDA. I definitely look at book value, and definitely cash flow from operations. Simple free cash flow and obviously net cash flow are great, but it all just depends in context, I find. And then I'll look over at the debt and stuff, if it has retained earnings. Those are all good things to check. And then obviously insider buying on this side. And then, like I said, if you guys haven't seen any of the previous videos, this column here is where I, like last time I looked at it, I'll mark the date, and then that way I know about how long ago I looked at it. You know, it more just tells me like that value, what I thought last time for my notes might be way off, or it's still somewhat relevant. It just kind of puts it in time for me. All right, so quickly, like as I'm scrolling down here too, I'm looking for cash flow from operations types things. You know, not super cheap on a value. It's healthcare, which with 82 in revs and only 51 in market cap, it's a little small for me to get interested on that. And that's more from the revenue side. Not that market cap 51 million is not small, but I have to have a sufficient amount of revenues, because at some point the idea has to be that it can change its margins and make a lot more off that. So if the revenues aren't drastically higher than that, your chance of the company really growing just on a metric would be, I mean, don't get me wrong. I mean, this was obviously a big mover at one point. So one thing we can always do here is just take a look at the chart here. And it's been in a steady incline from under a penny. Was that right? That's over a 5-year time period. This thing got down to a penny. 29 bagger right there. So I guess that's what you get for assuming anything. But it does generate cash flow. So when it gets down to its lows, it's probably actually worth something. And I have looked at it once, and I said good fundamentals. HC is for just healthcare. It's just a quick thing, and I put it on deck actually. So I wonder. So that was on 517. Let me go back to that chart, because now I'm wondering, did I miss this? This is years. I need not intraday. Jesus. 1 day. This is 1 day yearly. So I guess I got in around. I was talking here, 20 cents. Yeah. I mean, it has doubled. So it's definitely one to keep in mind. Actually, I'll probably try and keep a better eye on that. But that's my point. So that one's on deck. That one should pop up a little bit more often to me. And obviously, that's just a quick. I mean, I'm getting that from metrics. That's my understanding of that company from metrics. So, if I want to go into my fundamentals here, let me just enable this here and put in VASO. So it's a medical tech company. It's focused on the care of patients of all ages suffering from respiratory distress associated with lung diseases, chronic obstructive pulmonary disease, congestive heart failure, pneumonia, asthma, and COVID-19. Its device solutions are focused on high-velocity nasal insufflation, which delivers non-invasive ventilatory support to patients suffering from respiratory diseases. So it has a bunch of different stuff for breathing. But, normally in like with biotech and healthcare companies and stuff, I'm not necessarily going to be looking at them. Is that the company that I had up? Is it not VAPO? It's VASO. I knew it. It's just like that market cap's not right. All right, sorry about that. Let's go with VASO. There we go. I should have noticed that. Sorry, right off the bat. But either way, it doesn't take too long to update, which is the nice thing about the way I have it set up. So nothing to do with breathing apparatuses. It's principally engaged in operating healthcare equipment and informative technology industries, professional sales, equipment, IT. So just kind of a mix, it looks like, of equipment for general electric healthcare into the health provider middle market. All right, so it just has a few different parts to it. It has different named companies, so they probably have to do with different products or the different services they offer. But as we look through here quick, you can see, book value. I mean, and these things are, they're pennies for the shares. And I do all my metrics, total 12-month trailing in per share. So when you see, like I say, book value is 15 cents. And that's also assuming it's not too leveraged, because I have a leverage calculator here that will adjust it if the company's really levered, and basically drop everything down in the idea that you would issue shares to equal the amount of leverage that you're trying to reduce at a reduced equity. But I mean, as you can see here, even on some of their longer stuff, it looks like things are slowly trending up. So that story's good. And these are small numbers, but they are positive. Let me just make sure that they diluted in 2020. They've diluted about 20 million shares. That's actually not too bad. I was thinking that was going to be worse. And their debt is basically non-existent. I got to figure out what the other long-term liabilities are here. But it's not bad. And margins, cash flow is decent. Net income's not only decent, but growing, which is good. So, maybe sometimes you look real quick at something like that, and that's probably why it caught my eye the first time, is all those little things I'm trying to figure out about the company. Now, things that, and so this is my confidence ranking on this one. So with all this being said, like I said, it's a small company, it's healthcare. I don't know all that much about the business just yet, obviously. So would help if I knew what the ticker was too. But I'd have to kind of delve into these little parts, and that's when push meets shove and this starts to get cheap. That's when I'm going to dive a little bit more in. So you guys are going to see too. You're going to probably feel like I skim over stuff, and the reason being is because it kind of has to be falling into that sweet spot for me where I'm going to be able to take like a large position, and when it does, I'll start really delving in, because I want to make sure I know as many little details as I can about that company. And don't get me wrong, you're not going to be able to figure out everything in the time that you necessarily need to move. But if you've done enough work up front on some of these, you can kind of quickly hone that down, and just get a general idea. Obviously, and then check Seeking Alpha, see what the news is. If anyone's writing about it, does anyone care about this company? VASO to list on NASDAQ via SPAC merger, and this is December 7th. So this just jumped on that news. Let's plan to uplist. Upon closing, VASO common stock and warrants are expected to be listed on the NASDAQ under the ticker symbols VASO and VASO warrants, respectively. Transaction values VASO pro forma equity value approximately $176 million at $10 per share. What does that mean? So I don't know quite what that would do to the company, to be honest. That's where I'm still a newer investor, so when I read that, I gotta figure out more what that means. I mean, I can do the math there, but does anyone get any of that money? That's my question. I don't think so, because it's just saying they plan. So maybe they're just gonna mix with those guys. So this AVHI, who's this? So I guess my question is, I'll have to look more into this. Is when a SPAC merges like that, what becomes of that? I mean, this says this Akari Venture Holdings is worth about $10. So I don't know if those come together. If the shares are gonna, because this obviously dropped right down at almost the $10 mark, which is, I'm guessing, it trying to meet with VASO there, and that's probably why the jump, because they must be valuing it somewhere where it's going to land around there. Oh, I'll have to look into that one. Or if you guys know anything about that kind of thing, obviously there's always more just people in finance that like that might be more their specialty. Like I said, I'm always trying to learn, but sometimes I run into something like that and I'm not really quite sure how that all goes down. And at some point I'll think of it and I'll do a bunch of research and figure it out myself if I don't find something else that explains it. But either way, let's keep going. We can sit here all day on that one, but I got to figure out what that means before I really am able to judge anything on this one. So still interesting, not a bad find. This would probably be another time or a thing that's good to do with that is maybe Twitter or X, just because you probably can figure it out on there exactly what that all means. Someone will post something about it. Stalking makes you thirsty. All right, so bit farms, no one cares about that. Just kidding. Biotech's not gonna look at a biotech. Costs, I've looked at those. I don't even know why, except probably the sales. And like I said, so revenues there, 250 million versus 50 million. There could be something more there, and this is probably something that's bounced. Now it's not a great chart, obviously. That could just be still on a death roll down there, so it doesn't really matter. But maybe I looked at it for a narrative at some point, because sometimes you see stuff popping and the metrics don't say anything about it, so sometimes it's easier just to go more by the news side of things, at least to figure out what's going on. Not seeing all too much. Another biotech. This isn't a 15% low, although 63% upside. It's very new, that's why. That's too new for me to really judge much of. And I am kind of the value investor on that side of things. I should be able to value it somehow, and with that, I'm probably not going to get barely anything that I have like confidence on. So I'll probably just I'd skip something like that until it has more, just because I really need some kind of margin of safety for me to go into something. And I mean, those can be high, and sometimes I can feel like I got in way too early, but that's part of it. And I would at least rather know I got in early on something I considered having a margin of safety, because then I don't feel so like, fish out of water. To keep going, what does Liberty try? Oh, yeah, Liberty. I've looked at it a bunch of times. I'm not doing anything with that right now. Equilium. That one sounds familiar. Maybe I've just seen the name. No earnings yet, and not much. Very small. I'm probably gonna pass just because it's healthcare and it's that small. That's really small for me. Quanta Sing miscellaneous. Interesting. I mean, just off these metrics, this looks good. Like too good. So we'll pull that up just to see what's going on there. I'm just going to disable up here, because if I don't do that, every time I click one of these, it's going to try and pull it into my fundamental sheet. So it's just going to slow things down. So we'll just stop it from doing that. Let's see what else here. Permapipe. The upside on these just seems limited. Yeah. That's the other thing too is, and that's where, and maybe I'm totally wrong in doing it that way, but nothing about those metrics screams like amazing. So unless it's growing, which I know obviously I'll have to delve more, but it's just they're also small too. It's sometimes it's Dave does have Insider, just one recent purchase. So is Permapipe, but maybe it was a while back, and this is recent. And not that it's very much, but sometimes it's just a vote of confidence. You got to think too. Sometimes when you're looking at such a small company too, like maybe that's a lot somewhere in context there. Let's see here. No. It's alright. Sometimes I'm assuming some of this must be boring, but it's part of it. Sometimes you're just sitting here kind of digging around, trying to find stuff, get a list going for the day. Now this happens to be, like I said, like the weekend and Monday's worth of companies. So there's a lot here. Sometimes I scroll through this really quick. It takes me, and I find 3 or 4. And on top of that too, I'm also trying to explain some of my thought process to you guys here, just so you can see where I'm thinking. And, hopefully someone finds that helpful. Still not seeing anything on those ones. Some of these are low, but I'm not seeing any kind of real cash flow from any of these. I'm not looking at finance. There was a bunch of opportunities when that little banking crisis happened this year, but they bounced back so quick. I mean, you either got the thesis that was all just a bank run essentially, and then it got paused, and then and everything went right back up. And if it didn't go back up, then you should probably question your bank. So a lot of those guys, I know some of the people said that they that like the bank shouldn't be necessarily like in trouble because like the Fed puts out like its forward like thoughts and predicts, but at the same time too, I'm sorry, you're in banking. You should know, and you should have your own judgment. That's like what your job is to predict things. And I know maybe not a bank per se, but still. It's almost disrespectful. Cons down here. I saw cons is down. It's still down. It's past this low. What is this low? It's drawing here. Drawing lines, guys. Yeah, that's low. And if they can somehow turn it around, when this thing jumps, I mean, it gets cheap and then it jumps, and we're reached that cheapness again. Now I know this is the COVID bounce right there, and who knows what it would have done if. But same thing. Would it have just trickled down through here? It's so hard to say. So the story there is totally narrative based because it's a retailer. I feel like they've been around for forever, and I don't think they're going to go bankrupt just because of the VIE structure, and they basically offload all the risk on the debt to other investors, and they take like a small percentage of it just to kind of even it open and give a bigger percentage to those guys. So it's almost like junk bonds, and that way it protects them in default because they basically have people buy a lot of their products on credit through them. But it's all about when it turns around, and maybe this is a better time to get in. I've looked at it so many times, and I have been in it too. But on some of the bounce, it caused me to back out. So now it's getting back down to where I'm starting to get interested again. But we're also headed into such an ugly retail environment. I think so, and I try not to really predict macro, but I try to, like, if that's the bear thesis, I have to weigh at least how serious I think that thesis is in terms of happening. And as of now, I don't have enough confidence on the bullish side to be like, those guys are wrong. And if that continues to just not generate cash flow, because normally through the rest of its business, it did. It never really made much on the credit side, but either way, it's one I've looked at a bunch. I'm curious, but that doesn't mean I'm going to be doing anything. Oh, sorry, I just realized I had a guest here. I'm not used to looking at the chat here. Sorry, I'm just trying to read what you said. I'm just get caught up here. Yeah, I'm not really a day trader now. It's more just like investing in. It's not super on the long side per se. It's not like a typical value investor, but it is more value investing. So, and yeah, the spreadsheet. I don't know if you heard about RKs. That's kind of where me and Johnny, who's my other guy that I stream with, he's the other one who him and I both built spreadsheets to kind of follow in that vein, and then. From there, it turned into this. But no, not really day trading. I was seeing about the stocks here. Yeah, I'd have to look at them, but just because it's that kind of so what are you saying? Intraday runner, kind of surprising. Yeah, I'm not really looking intraday. I get the idea of it. Don't get me wrong, but that's not really what I'm doing. But I mean, good for you if. Yeah, the spreadsheet takes a long time, but once you have everything up and running, it really makes everything so much easier. So, because like I said, there's just so much going on here, so you're just trying to kind of keep track of the market as much as you can, and like I was showing, so this is like my I don't know if you saw any of what I was saying before, so I'm not quite sure when you got in here. But either way, and then this stuff will all get pulled into like my fundamental one, and then from here it breaks down the data, and I can check it in a bunch of different ways, and I have just some hot links here to just go to different websites, and that basically just allows me to look quickly at all the information I need to, and then from there to send it to a database, which gives me ideas on where things are valued and all that. But anyways, so we're looking at com. Oh, this is from Monday. This is all stuff from Monday. And let's see here. Macy's only popped because they got bought, or are gonna possibly get bought. So, you ever day trade anything like that in NASCAR, like in the mornings, like when everyone's trying to hop in on something like that? I wonder, like, is it right at when the big guys are all the way going? Do they just buy it right up to the price, and then no one else gets a chance? I'm not usually looking at that time, but what do you call it here? Cigna, rainy, doesn't generate any revenues, of course not. Brilliant Earth, it's like that diamond company. When I looked at them recently, so they must not have been close enough that it mattered quite like that. Let's see here, bouncing off the lows here. What's their let me just enable this for a second. I just want to know what their ticker is real quick. BRLT. Gotcha. Yeah, I think the day trading thing's fascinating. It's definitely not for me. I think I'd be sick to my stomach too often trying to do it. But I mean, don't get me wrong. It's even though I'm into value, I definitely look at like I've read technical analysis, so I understand. I like the basics because I like to know what other people are looking at. And I guess the closest I would probably be is more like a trade, like swing trader. You know, because you usually I try to hold things. Most of my theses will evolve at the fastest in like maybe like 2 months, 3 months, kind of over an earnings period. And then depending on what the return is when I'll decide to kind of bounce out if I think that's kind of the end of it, or if it kind of reaches a fair value for me. But so that's what I was wondering with this. This is 243 and the price is 339, so it's a little pricey for me. Do these guys take on debt? Yeah, they 102. So that's why I'm not looking at those guys. They're just too expensive, but they do have some decent metrics. No acquisitions or anything like that. All right, here. So getting good entries, not so great with my exits. I was in Vivos, $6 a week ago. The date ran to 48. Well, yeah. I mean, that's a crazy good entry. Yeah, I mean that's part of the thing too with the exit. I mean, especially if you get a stock that pops like that, because yeah, you're right. Vivos did really jump in the one day. But the issue I find is, you know, how like I have no idea how high it's gonna go. So to be able to pinpoint an exit without feeling like I'm going to just get my cash ripped out of my hands. Because that's what would probably happen to me. Just end up losing money. And so far, the slower approach for me, even though it's slow, like in the context, you know, if we're shooting for 50% returns, if you do that yearly, I mean, 50% returns become astronomical. So that's kind of what I'm shooting for when I'm looking at different companies on where things stand. And then we'll go down to the losers for the day. So let's see here. Not a lot. It's actually lighten up here. These guys. Clean Earth. Have I looked at them? I don't think I've looked at them. Whoa, look at that chart. That's a beautiful chart. Dropped to 450. Clean Earth Acquisitions Corp. I feel like I should know this name. It's not clicking right now. 22% back up, so it plummeted and then jumped right back up. And even though some of these say 0 here, oh, I gotta disable this again. Even though some of these say 0 here, I can still see there's my conditional formatting there. It just changed the color just enough to let you know that even though it's rounded, that there is actually cash flow there. It's not actually 0. Obviously, it's not much, but it's a small company. Oh, you know, they don't even have revenues. All right, now that I'm looking at it, I'm going to pass on that. It's a little too early, no matter what, to judge much anyways. Dune Acquisitions. Cool name, right? Dune Acquisitions. Man, I'm not seeing much, to be honest. There's so many things I'm just passing through. Whether I've looked at them before or they just aren't. They're either so small or... Yeah, I mean, it definitely takes a while to learn Excel, I feel like, to this level. But it's more just like... I feel like if you want to really learn Excel or do anything really, like you're better off to have like an end game. Like I kind of knew what this project I wanted it to look like, what I wanted to be able to do. So, but yeah, when you start to have everything and you have it organized properly, then that's when you know, you can really see what's going on with things. You know, and then with my database, I mean, I couldn't even tell you. I think there's over 1,000 now in here. So I mean, these are all companies I've looked at some point. But that's why I say, you know, when you're tracking so many things, you really do need to stay organized, which is what, and like I said, so I don't know if you know, like I said before, but the RK story, you know, was his, he kind of built this, and this is like a copy of it for me. So it's not like I came up with this. I had to build in Excel because he used Google Sheets, but either way, and they both essentially do the same things. But yeah, being able to have all these metrics, like that's the thing is like no matter what, I mean, I obviously don't have a Bloomberg terminal, but there's no way I feel like to get this data organized where it allows you to just kind of have this look at things. But I imagine, yeah, even as a trader, I could probably see all kinds of things that were useful in having this structured, and whether you're looking at these kind of metrics or like you said, more to volume and all that stuff. But yeah, I mean, you know, I'm sure news probably helps you guys a lot too, because, you know, I mean, if you want to be bullish or bearish on something and you're going to trade it on top of the volume, all that, I would definitely want to have like a news story or something that gives me some hope that people are thinking what I'm thinking. Oh, you know what? That's why. I never even updated this. These are the old losers. These are the old losers. Who's this guy? GDH. Oh, isn't that Golden Heaven or something holding? Yeah, Golden Heaven. I'm pretty sure it's some. I think it's a Chinese company. But I'm not looking at that. Wow, all this stuff is bottoming out. Holy crap. Expo. Was it their debt? They have debt. What's their... Well, that's actually not too bad. before. I've looked at it before, and I said too young. It's from 2020. Gotcha. Yeah, I feel like the market was hot for a little bit, you know, coming off kind of the adjustment to inflation. And now people have kind of priced a lot of that in. Gotcha. Yeah, I mean, the one nice thing about this is it's not like there's certain times of the year that are better than others. It's more that you're just basically like kind of looking at everything at all the time, and then when the market reacts is when typically more on my value side when I would start to get interested into something. And not that I don't take technicals in, you know, I'll look at the, you know, RSI and stuff like that and see when something's down like this and trying to figure out if it's ever going to get back up to at least, you know, like this 15 range there, or something in the 20s there. We'll throw that one in just to check out. I don't know if there's anything to it, but it's probably going to be too expensive based on that price and what I'm seeing here for book. Let's see here, what else? Nova, this is all healthcare and tech. Then RH, we just looked at RH not that long ago. That one was somewhat interesting, at least as a retailer. So anyways, let's go. Oh, this was losers of the week. I clicked the wrong part. Let's go back to dailies. This is daily losers. The losers of the day. There's Golden Heaven popping back. What else is going on in here? Valo. No cash flow, so you're just taking on debt. Is that what's going on here? From 21. That's too young. I doubt there's anything that's changed with that. Delta Apparel. Negative earnings. But cheap on a bunch of other metrics. We'll take a peek at that. What? Delta Apparel? I don't think I even know what that is. I mean, I had to have looked at it before, but it's not ringing a bell on what it was. Let's see what else here. There's RH again. There's Exponential again. This is fundamentals, fast grower, high debt, dividends, too expensive. I just want to take a peek at this chart here. It's probably an interesting company if it ever goes on sale. If I can find the right spreadsheet here. All right, here. Yellow. Yellow's still bouncing around somewhere. It's amazing, actually, that it's still bouncing around somewhere. It's 370. How is that possible? Isn't that thing gone, basically? Remember there was the huge pop when Yell. Did you see when that was going on? Well, it's I just use Fidelity, to be honest, but it's like I don't need anything special. You know, I'm not trying to get in and out of positions like super quick, especially within like where, you know, you're gonna want like hotkeys. Like that's not me. So I just use like a regular, you know, like what everyone would use for like a brokerage. But yeah, I can imagine some of you guys. But you know, I figure like my friend showed me the one guy, Warrior Trader, and he I think it's called Sterling is one of the ones that he uses, and like Lightspeed. I'd probably use what something like that, what that guy uses, if I was going to do that, because the idea of getting in and out. Yeah, that's what I was talking about with Yell, and that's why I'm surprised it's still worth 370. Like it's been in bankruptcy this entire time, and on the chart here you can see the volume. I mean, this volume here when it was like 550, that's when it went from like worth nothing to it was crazy. It's crazy whatever that jump was. What does this look like on here? I mean, look at that. From 60 cents to 350. You know, and I was the worst part too is I was looking at Yell, and I don't remember if I took a position. If I did, it was in here, and I got out quick. More looking at it like a cigar butt, but yeah, they apparently are bankrupt. You know, news to the shareholders. Let's see if there's anything else going on here. Market wise, I wonder where this is going. I just don't see that business working. You know, but at a certain point, it obviously gets cheap at 274. You know, but this, who knows? That's one of the ones too. That's when it's bouncing on the bottom there. It's, you know, is it going to go bankrupt? No. So, those kind of things. Well, actually, I say no. Now that I'm looking at that, look at its book value. Maybe, is it really? Yeah, it is levered. Probably have to wait if that gets cheap again. For the day, 49 million shares outstanding. Gotcha. Yeah, like I said, for my side, I don't normally look at healthcare companies. Sometimes I do. Just depends on what they do. Because, you know, I have a background in healthcare. So sometimes that stuff means something a little bit more to me. And then other times it's more just there's like a news story or something that I read. And I'll go with that just for a little bit just to see how that goes. But yeah, you'll have to let me know how the trading goes. Because me and my friend we try and do one stream each a week, and then on Saturdays we do a stream together. So Johnny's on usually Thursdays, I do Tuesdays, and then together on Saturday. So we'll have to keep in touch. We'll see how the trading is going. You'll have to let me know. I'm sorry, I'm not going to be able to provide any hot trading tips. Well, I might be able to at least get you the news story before something breaks. A lot of day traders will hop into these kind of things, but they're already behind the story. That's the goal of this, is to get in way before the trading begins. Just nothing. So much nothing. That's SPWH again. That one keeps catching my eye. You can tell me I like that one. But you know, I say that, and then I see that its revenues are only 265. Oh, and then it's tangible. Okay, why am I'm not pumped about that. It just keeps catching my eye. Whatever. I'm sure there's something to look at there. It's not going to be something I would look at too much right now, but I will take a peek at it just to see if there's anything good going on. AK Brands, aka Specialty Retailer. Let's take a peek at those guys. Even though earnings are low. It depends on what it is, and like, you know, I'll hold something for anywhere from a few months to like a year or two. Probably not much longer than that, because most of the theses I have should be faster to play out than that. And I'm pretty rare on options if I was going to do something like that, but I would say for market caps, 50 million is kind of in the low side. It's tough when I start to see something that low. And not to say I won't dabble, but those start to get low. But I'll go up to a few billion. So it's not like I have to see one thing or the other. I mean, it's all in context. You know, for you guys that are trading, you know, you're not necessarily focused on what the business itself is doing. You're more playing the psychology of the market. where we're trying to more just figure out really what's going on with the business. And these numbers, this initial part of me screening for companies here, that's just to give me a list of things that kind of catch my eye, and then to go in a little bit deeper and see if anything else actually has something that matters to me. Because that's the other thing too, is I take pretty concentrated bets. So if I'm going to go into a company, it's with a kind of a large chunk of the portfolio. You know, for better or for worse. I just set a stop loss, and then that way, could be wrong a few times, and you only got to be right once or twice, and it'll heavily outweigh itself. And the nice thing too is most of these companies people aren't looking at. These are just so small. I mean that is definitely a huge advantage that retail investors have. Anyone who thinks that you can't compete with the big boys out there, like the big boys can't compete with us small investors. So we have like a uncharted territory here. The problem is them figuring out, making sure that your news is legit, that the company's legit, trying to figure out what you can about management. I mean, some of these, you know, as they get up into the billions, you know, that's not to say they're small companies by any means, but those ones you might at least get a little bit more information about, you know. Those aren't so hard to figure out sometimes. Yeah, NASCAR. I mean, that's honestly, you know, most value investors won't even look at technical analysis. They kind of laugh it off, and I think it's good to use both. I think narrative matters. I think momentum matters. I think all those things matter. And when people try and judge, like value investors are always like arguing about, you know, what truly is value, and not arguing, but like just it's more like they're constructively trying to figure out what's the best way to value things. And like, why is a stock, you know, why is its PE ratio expanded? I think that's bullshit. There's no such thing as PE expansion. PE expansion occurs because of changes in the market and changes in all kinds of other things. You know, and when it's up like that, there's, for a lot of reasons, you know, narrative is probably a big one, and people are overpaying for these things. So if you get in early as a value investor, you just get this huge advantage, and people call it the expansion of that, but all it is other things are going, and the problem with most value investors is they hold value at such a high level, where, like, let's say 80% of my analysis I bring down to value. Well, if it's 80% of your analysis and you're only leaving 20% for the other, well, when you can't explain why the price is because you put 80% on the value side, that's because the other 20% that you didn't think was really serious, the rest of the stock market cared about. And I'm not saying that that's, you know, going to lead to issues if you're paying attention to those, but I think you should take it into consideration. I think that's super important. But yeah, having a list of things that you can just jump into, that's the most important part. That's why, so in my database tab here, I have anything in the like orange color there or whatever it is. Those are, something was interesting about them. They're on deck for me. How would you value a stock like RSL or Pixie? It's just rolling door stock offerings and reverse splits. Pixie. Well, that's a good question. And don't get me wrong, sometimes there's not really a great way to value certain things, and on those, it's going to be tough for me to really say it deserves a value, basically. And honestly, sometimes you'll even see when I'm trying to value something, if I really can't come up with a value, I just think it's impossible, I'll pretty much go off a chart. I'll just put what the chart says and say, hey, this was just based on technical analysis, as like a comment. And then that way I know that's about how confident I am in that valuation. But yeah, so this is Shift Pixie, as what I'm assuming that you're talking about. 2-year high of 4,500. So that's just because of dilution. So they don't have many shares out there. So you really can't. This doesn't mean anything, because all they've done is like you said, dilute the hell out of people. I don't actually know how many shares they have because it's so low. Because mine's saying 0. What is this? This is AQ 373. So let me go to my data here. 373. So no, they have 400,000 shares. Well, the issue is they're just diluting. But so this is why someone would have known to get rid of the stock though earlier on, because as you get diluted here, you're going to get screwed out of this. So they can dilute these shares all they want, but you know they don't generate anything in book value here. So if we're going to 1 year here, you know, net income is so net income. I don't know how much you know about the financial side of things, but net income means that's like whatever's left over. That's like the money you take home, like from work, basically. You know, it's just negative. It's been constantly negative. So this thing just burns cash. So no matter how much cash or whatever assets this thing has, it's just selling them off as fast as it gets them, basically. You know, these margins are all insanely terrible. So it's basically telling you, and look at this. Look at SG. This is what they're spending on who knows what, and it's over 100% of what they make. That basically means that they're robbing shareholders here. So how do I value something like this? I say to dilute more shares. I say to bring it to 17 million shares, which would raise a stupid amount of cash for them. But no one's going to do that because no one's going to. These shares will probably tank even more than that if they actually put out 17 million shares. And that's what my calculator is saying is I have to get this to 17 million shares for this to be worth the leverage that it has on it. So right there, that should just be like a warning that you don't touch this unless you're shorting it in some way, because and not to tell someone you should short, because that's terrible advice, but I don't know. I mean, who knows? This is way down here now. Maybe down in here somewhere it starts to find a bottom, but I mean, what is this business saying? What that's the other thing too, is like what it's a specialized human capital service provider that provides solutions for contingent part-time workers' demands, primarily in the restaurant and hospitality service trades. Do you know this company? Like, do you know what these guys do? Provides payroll-related employment, tax processing, human resources, employment compliance, blah, blah, blah. So basic payroll processing to a suite of human resource information systems technology. Okay. So they're like that side. But so then, you know, we can go and see what's the news going on with something like this too. Is anyone talking about this? Cash injections won't save the company. I mean, you know, literally what me and you were talking about, that's what people are already saying is it's not gonna, you can sit here and pump cash into this thing, but if it's never gonna grow, you know, if the business isn't gonna actually do something. And the other thing too, I would wonder what the short interest on something like this is, because now that there's and it's in Miami too. Doesn't that just sound questionable? Nothing against Miami. I love Miami. But I mean, you know, no earnings. Revenues are increasing, so I don't know. Maybe, who knows? That's where growth investors come in. You know, growth investors look at that and they sit there and figure out those numbers and predict whether it's going to go. Yeah, and you know, if you're a trader and you're able to hop in on something like this and plan it out, I don't blame you. I see ADTX. This is the other one that you were talking about. But yeah, I mean, if you're able to play something like that, this is my thing though. So like when you're talking this open warning, I mean, are you guys day trading this in between here? Yeah, reverse splits can kind of throw things off because, you know, I don't think people even understand half the time what a reverse split is. And they see big price movement and people just start piling on. I mean, so some people are so quick to buy into things that who knows what they're thinking and if they have any kind of purpose or if they're just hoping for a lotto ticket there, you know? All right, so we'll check the weekly up top here. Is it 820? All right, so this has been going all right. What is this? Newegg. Newegg just had a recent pop, right? Yeah, it's coming right back down, but almost up, huh? Way off the bottom there. What was the news on that? Did you hear the news on that story? I remember something with this. Just regains compliance 1 hour ago. It's really just came out an hour ago. Interesting. I mean, that doesn't mean anything because that's from the pop initially that caused it, but it still had a 13% up day. I mean, it's not shabby. It's like real strange big moves here. 850,000, 830,000. Is this all you traders out there? Is this you guys just making all this volume? All right, keep going here. Disable this. We'll start to get more into the company side of things here. Kirk, I don't see enough upside with Kirk. Not right now. Yeah. Rainy Biotech. I think I looked at. Is there news on this one? This is kind of one of the biotechs I might peek at. You know, I hate these stupid Zax articles. It's like talking to a robot. Everyone's worried AI is going to take over. Not if they keep making this. Oh, this is Pixie. I probably can close some of this up too. I don't know if this slows down the stream at all. How's this stream been running? Does it seem like it's laggy at all? Because, yeah, if you hadn't noticed, I'm pretty sure you're my first guest here. So thank you for joining the stream. It's nice to have somebody down here to talk to. But we'll go to insiders here. So last thing I check, so I use Open Insider for this one, and this one pulls in all the insider buys. So I find that's a nice shortcut to getting just if not only the metrics usually look good on these, half these are cheap. They have good metrics, and then you're seeing insider, and it's like you start to see those three things line up. It's like there's an eclipse. Pretty big mover in the market. I like to classify low float, SPAC, a recent IPO sub one, or spinning off a legit PR. It's just amazing how it shifts from one category to the next. Thank you for letting me know. Yeah, and that's that's the kind of new stuff that does cause things to change quite a bit. But usually, if you just take your time and you're looking at some of these companies while they're kind of struggling and stuff, you can start to see some of that stuff happen before. I seen it with Transocean and just kind of the whole idea of offshore drilling starting to become popular again, and on top of that, them starting to deleverage, and then on top of that, there was huge insider buying. So that was one that I thought clicked well, and I'm catching some of these when I enter at pretty close to within 10 to 15% of the 52-week lows. So that's kind of the goal, because if you're able to hit on that and it's in my margin of safety, which is just basically like a low ball valuation I give companies. From there, I'm looking for either at least a 50% return to a few multi-baggers. So and I tranche out on the way up. It's not like I'm gonna even if it went 5x, it doesn't mean I'm gonna capture all that. But if you're just selling on the way out slowly and maybe timing, if it drops a little bit when you first get in. Otherwise, I won't hold it too long if I'm initially wrong and where I think it's going to go down to. But so far, it's been working. I can't complain. This year's been great. Once I really got the spreadsheets up and working, it was a lot easier to feel a little more comfortable in the investments that I'm taking on and making sure I'm getting what I think I have a well-rounded is. Because the worst thing, you don't want to make a decision and just be uninformed. It's lazy, to be honest. Let's see here. This DMC. Boom. I like that. I didn't realize that. Oh, I thought it loaded something. I'm just curious, what would be the fundamental rating of CCC? All right, hang on a sec here. So I'll go to my fundamentals here. And like I said, you got to remember too that the leverage calculator gets kind of messed up if something doesn't really have any earnings and stuff, or if it really needs to dilute. Like if this thing's diluting, because that's the thing is no one's gonna pay. I'm assuming there's like a 40% discount if like they have to do some kind of share dilution, which I know is a lot, but at the same time, I think anytime I see someone get diluted, I don't expect the share count not or the price to not drop 30 to 40%. So I say let's just go high and. That's why I said my values are all relatively conservative because they're based off these insane, low valuations already. And I'm trying to get it in when I'm already under those low valuations. Both of one was just an algo spike and drop while the other turned into an all-day runner. Wondering if there was warning signs with Cadle. So just so you know, my marker based on the cash flow from this company and kind of how I visualize this in my head is I'm taking, the equity's value, and over time, if the company's not able to generate enough through their cash flows and they already are levered, how fast does that eat away at their cash, and when does it start to get to if you were to have to reverse that and you were offering share counts at the discount, this will generate the idea. So I'm saying it would be 32 cents a share before this would become interesting for me. So I don't know what it got down to $1.06. It looks like here, and as high as $9.40. So you can give that as a thing. But yeah, like if I was a trader and I was going to trade this, because my strategy wouldn't change. I'd still want my margin of safety. So what I would probably do is I would just basically put in buy orders at these ridiculous prices. And if the stock price dropped down to that, I would think that that's a comfortable place for it to bounce and get out quick. But I just, the trading things, it's tough for me. It's so fast. I feel like I would never be confident, even if I did okay at it, that I would really be doing anything. Like, I don't know if I would be getting it right because I'm actually predicting something correct, or if it's, and I get it. People can read charts, and I get, when you should time in and out of things based on like a bounce and stuff like that. But it's still just, it's not my thing. But same thing with this. I mean, this is another one that doesn't really have any earnings. So, without earnings, all this is negative. What's going on with share count here? They've been keeping it steady the past 2 years, but that's also probably why this chart now is just starting to drop. Besides the one bounce, I mean, yeah. But it's the thing, so are you catching these bounces? I wonder, like, no matter what, when if you're going to make money in the stock market, you need to be able to have like some kind of process that shows you things, but right when you need to be in them, preferably at the bottom, buy low. So, my question to most traders too is, I know you guys look at volume and you're just trying to find the biggest volume. Like, would you argue that you're like a momentum trader? I don't really know how else you would trade very much without momentum. Like if you're doing intraday, I don't know if you do intraday and you're not on momentum, I don't know how you do that. But maybe there's a way to go. Sorry, my dog's making noise back there. All right, back to get here. DMC Global, I said. Oh, did I update this one? No, of course not. Let me get rid of that. Let me disable this again, because sorry, every time I do this, if I take a ticker in or out, it's trying to load them in the background. It just slows everything down. But HG Hamilton Insurance. Oh, that's not who I was thinking of. I was thinking of a different company. Westrock. Top Golf. High Point Pharmaceuticals. Someone's buying there. Westrock Coffee. Just tracking the trends and knowing what stocks to be watching for each day. One day alone. Yeah, I got you. Yeah. I mean, and I'm sure whether you're trading or investing in this style, it's always following trends. Whatever that trend means to you, the better you can see it the better predictions you can make. Yeah, I'm just someone that takes. I'd rather delve in a little bit more and just take my time. I don't need a super quick return. But like I said, with each stock I buy, I expect a really high return, which I think even day traders, I doubt they hold stuff for as long as 50%. And the other thing too is I wonder at a certain size, because I imagine you're kind of like scraping money out of the market essentially. So what's like a big company you go for? Like how big of a company can you get into before it doesn't interest you? Is it a price thing? Is it a market cap thing? I mean, I know that's, and obviously share count's involved in that too. I'll look at Sportsman again. It's trading at 420. It's a reasonable thing to look at. Valuable resources. Market cap's too big. Although I guess no matter what, I mean, as you get to a certain size, no matter how big your funds are, you eventually have to get squeezed up to the bigger companies, which will be super soon for me. Super soon. I'm trying to stay under $9 per share and under 20 million shares outstanding. The metrics of the biggest runners are heavily favored to these. Yeah, that's what I was thinking. That's what I'd picture, is that it's on the low side there. Not with that market cap. Union Pacific. Who the heck's buying that? Tile Shop. I think I looked at those guys recently. No, I didn't. I mean, I remember seeing the name. Something must not have interested me there. Ford. There's an exciting one. Howard Hughes. Wonder what they pay for a dividend. It's not even anything. You'd think a company like that, that's like what you'd be looking for. And I think I've looked at down here most of this kind of stuff. Well, either way, we didn't find too many things today that are something I'm going to delve into here, but that's a good start. We can go from there. So what we're going to do now is we're going to hop over to the fundamentals tab, and we'll turn back on this, and then in here, these should be basically all updated. Oh, Quanta Sing. I should have figured this was Chinese. Sometimes these are really tough to kind of get any kind of valuation. Their numbers are always make no sense. 55 million. They apparently just are sitting on a ridiculous amount of cash. That's what they say. Yep, just somehow generated all that cash. I'd like to look at a map, see where this actually is. Go on Google Earth and actually scroll in and see if I can find this place or not. Yeah. Just because this one's got the foreign risk, it's probably not going to be very interesting. Looks like whoever owned it sold out there. Some people bought in here during all the nonsense. And they just have a ton of cash. Just so much cash here. 173 extreme runners tracked this year. Stock up. Average metrics price equals 376. Shares outstanding 36. Average daily volume is 1.8. Interesting. Yeah, I mean, I'm sure that's all the kind of stuff that's going to really matter to you. I'm just going to throw this in the database just so I have it, but it's going to take me 2 seconds. So sometimes, too, you look at a company and it literally takes about yay long to just say foreign risk, too young, needs more. And then I always just put a confidence rating in. So a 1 means it's going to go bankrupt. Apparently this thing has $733 million in cash just hanging about. And one thing I did do, and I believe it should always be correct is I do, no matter what currency it comes in, it always returns it into US dollars based on a current exchange rate, and then uploads it into all my numbers as if it was US dollars. So I always can kind of appreciate my fundamentals, even if it's a foreign company. And the other thing too is sometimes they will send their information over, and they only have to do it biannually or yearly, so I can adjust for that too. So I'll notice if my years are off, because if it's skipping years and stuff, then I'll know that they don't file quarterly, because it's normal. Everything's set up to be looked at quarterly. All right, trying to figure out where I'm going here. All right. So this is delta. So for this one, I just got to refresh this sheet here. I'll pull this up here. And that's how long it takes to update. So if I need to look at a ticker, but it's pretty quick. It's pretty snappy. It works well. The SPACs can update average daily price. If you ignore the SPACs, the average price is even much lower. I mean, have you noticed though? I mean, I feel like the SPACs had really dried up for a while. I know there's been a few recent SPACs, besides with VASO or whatever we were starting with, but I just feel like in general there's not as many SPACs right now. Everything's de-SPACed, as they say. All right, so I have looked at these guys. Vertically integrated international apparel company, designs, manufactures, sources, and markets a diverse portfolio of core activewear and lifestyle products. Oh, Salt Life. Okay. Yeah, I don't know if you're from the States, but I definitely have heard of these guys. We'll see. This is from December 7th. Net sales in a range of 400 to 415 million, generating operating profit margins of 2 to 3.5%. Expense should be approximately 15. We're currently planning on capital expenditures of approximately 5 million. Gross margins are down. So it might be like most, they got SG&A down, but like most retail right now, it's just in a slower phase. It's, even though it's the holiday season and everything, I think it's probably gonna take a little bit for some of this stuff to really recover. I think you're gonna have a decent quarter here, and then going forward, I think it's gonna slow down for a lot of this retail type stuff. So for me, it just means that I want to see a company that's really like expanding currently or something, or it's one of the ones that people are arguing it's going to die and it's not going to die yet. Those are the two kind of things I'm looking at now. I do have I do have more than one portfolio too. So, and some of the other portfolios, I might stick some companies that are more of a longer term hold. If a conference call, it just happened. This is just such a pain to try and look at it like that. Like, I just need to see some basic numbers here. This is what they could have said. EPS of -$2. Revenue is down 20% year to year. That's pretty substantial. So, still generating cash flow. We do say to dilute. Say it's worth about $6. So that's the other issue too. Is I can't delve into too much of it, knowing that it's worth more than that. I never put a price in for the last one, and that's because the price doesn't matter. All right, this is when I'm going to put TOA in here, and this just means I'm going off technicals, and that's just a warning to me that take that price with a grain of salt. 188. Then here, 25. We'll go with that. It'll be worth a look if it gets down that low. All right, back to Delta. So I had put this over there, at $6. What did I value it this at last time? I don't remember how long ago it was that I looked at it. No dividend. Share counts holding steady. They have some 222. What is that debt? That's the other thing too, is figuring out what that debt is. Look in here. So current portion of operating leases, current portion of long-term debt. So they do have long-term debt. Although 46 of it's the operating leases. So amended sole financial institution, blah, blah, blah. Honduran debt. Interesting. What makes you go with Honduras? Are these guys South American? Where's this company from? I thought for sure this is from the States. Yeah. Either way. Maybe they have a factory or something down there. I don't know why. Or they just know someone to use as their, where was that? Back in here. Salvador. So, due in 25, 25, 27, and 27. So, most of their stuff's not due right away either. So, it's less concerning. That's... Is that the interest rate or the full amount? It's gotta be the interest rate. No. Wow, it's 7.75%. Maybe it is the interest rate. Jeez. So that was to borrow up to $170 million, including maximum $25 million lines of credit, provided that no fund of default exists. The revolving credit facility, which is 7.8%. So I don't know if that's one of those or if that's a totally separate one. Either way, there's a lot going on here. All right, either way. I don't think that that's due right away, but still, it's a lot in interest payments no matter what, especially in this environment. And that's the problem when these guys get over-levered and then we move into this kind of spot. Soars last to de-SPAC'd. It wasn't even a SPAC, and the entire move happened early pre-March from the $8 billion to $78, 5 under 2 hours. Yeah, I mean, that's crazy. Yeah, see, the issue I find with that kind of stuff too is, you know, when these things soar, it's under 2 hours and it's always pre-market and it's always gigantic money moving, and your chance of hopping in, it's tough. I mean, you know, do you find that you can hop in onto these things? Like, do you ever get in these? So it's one thing to just, you know, look in hindsight and see that they've happened, but let me just go to my database on this one and just update myself. Oh, I said it was worth a lot more back then, so you can see the price has changed quite a bit. Now, granted, I've changed the way I value stuff. I'm in a Discord with a group of guys who are heavily invested in SPACs. It's not really for me, but I do follow them. Oh, yeah, I got you. No, I know that's a great thing, man. You can find, like, groups of people that have, like, a niche that they're focused on. What was that, $6.04? We'll just use that as our base there. Alright, let's say somewhere around there should be a low side. It still needs more. Ugh. I almost want to put it too small too. All right, here's this X-Wolf. Let's refresh the sheet here. Out of my beer. It's the worst. So it's saying that they're worth about 5. So it's pretty young. Once again, there's obviously a lot of debt here. Let's see what that debt is. Already $399 and assets are only $551. It's already a lot there. They are generating income. They're cash flow positive the past 2 years, so that's good. Let's see here. No dividends. Still young. It's young. It's hard to say much. Let me see. Let's see what the insider is here. Purchase. Ugh. Small amounts. Well, that's not small. When was that? 8.15. That's at $22. Wow. Talk about poorly timed. Wonder what's going on there. These guys all bought. You sold. Ryan Junk. He knew to sell. But yeah, I mean, granted, it's probably a throw in the pond because it's 21,000 when he's got 8 million shares. Imagine having 8 million shares. Yeah, I don't see much going on here. I mean, the fundamental story is slightly improving. The ownership is good there, but I mean that doesn't give me much faith when they're buying at that high of a level. That's so high. I mean that's like almost a misunderstanding of your business. Like it makes me kind of question management right there. And once again, it's these guys are all looking at growth, foundations for growth. Articles. As expressed with being said, go back to the founder's past history and current behaviors in the franchising example by any consistent pattern of deception. He's already saying that you can't trust. Everyone's saying there's a damning article too. Oof, the whole thing sounds ugly. False record low after disclosing SEC information request. Eek. Yeah, this is one that this all screams questions to me. So if that doesn't scream questions, right off the rip to people. Oh, I know. Some of the, yeah, there's all kinds of companies for a while you could invest in. It didn't matter. They didn't have to have anything. They could be a no-name company with zero revenues, and if it was some small, what was the Chinese one? It was like I can't remember what the name of it. There was like 2 different parts, and one was like a financial or something like that. They went from like $5 to like 1,000, and like, oh yeah, HKD, yes. I remember I looked at them too because they had the pop 1 or 2 days before that, and I was trying to see if there was any news on them. And then of course that's the stock I'm looking at, and obviously I'm not going to take a position or anything, but this was back in the day where maybe I'll throw 0.5% into something just to try it. Dayne went on the debut at 13, huh? So were you able to catch any of it when it popped? Because that was ridiculous what it did in like a day. Like me and my friend, we were like just laughing at it because it just seems so crazy. What are we on here? Oh, Sportsman Warehouse. Assuming most of you guys know what Sportsman's Warehouse if you're from the States, or you at least heard of the company somewhere if you're in investing, but it's all kinds of outdoor equipment, hiking and camping and all that kind of stuff, fishing, and then, even more stuff for hunting. Hong Kong was in. Yeah, and that's crazy. I mean, it's just insane. But so there's some recent insider buying here. You just switch this over to that. What are we saying? It's too expensive. My thing's saying it's worth $324. Book value's going up. You know, they're spending a lot in CapEx here, but that could be them expanding. I'd have to see if they're growing or not. Cash flow's kind of down, but it's kind of been bouncing around. So on a like a 7-year basis, it's at 37 cents a share, which is pretty good. So I guess it's really to see how high this thing goes. It does got the debt though, but once again, I bet a big chunk of that's operating leases. So we can bounce over here and just see what that is. Half of it. With a revolving line of credit, is that all they have? All right. Credit 1 million respectively. All right, so back to here. So earnings are down. It wasn't. I think Burry was in this at some point. I think I remember looking at it there when Burry was in it. Who owns this? Anybody own this right now? It's still a little expensive for me. I think no matter what, and you guys are probably gonna notice that too. Is, you know, some people. I'm sure there's gonna be people out there who do their own valuations on things, and they're gonna think I'm nuts because they're gonna say it. You know, it should be valued, you know, way higher than that, or, you know, I'm not taking into account growth. And it's not that I don't take in account growth, but I'm trying to look for investments where I feel like as many variables that I can't control, I push out. I think, in terms of my understanding of things, that there's a bunch of things you can't control, and whether you're super confident in how they are or making sure that the company doesn't have to deal with a lot of those variables, just the better off you are. You're going to make easier choices on yourself. There's a few people who own this with decent percents. Hawkeye here. Who's this? Arbiter. I don't know if what they got here. They are pretty concentrated. Here. Oh, Turtle. Custom truck. Gray television. Okay. And Fiesta restaurants, but they just sold out of those guys. All right. So only 5 positions. I mean, I would in Miami Beach. There it is. Once again, that's where it's at. No dividend. And what's going on with the debt? Is it increasing here? It is. Oh, it's all over the place, to be honest. But it's coming due. They have a lot of short-term due. So that'll put a strain on it. But he did buy. And 3 months ago they bought more. Let me see if anyone's saying anything out about it. Insiders. I've read his stuff quite a few times. 140 stores, 31 states, blah, blah, blah. Down. Had from an $18 share bet received from Great Outdoors Group 2020. Oof. But they wish they would have took that. Isn't that crazy? $18, and they said no. They must be pretty confident in their business plan. Deadman Wall. Yeah, they do have a lot of debt. Ronnie doesn't think he can get that low, TJ. you never know. You never know. Stuff does crazier things have been done. It got down to $3. You know, I'm saying I need it cheap. You know, I'm not saying it's ugly, but I'm saying fair value. I think it's like $3.24. I don't know. I mean, if you're looking at just book, you could argue 7. Even a diluted would be $4.20, which is about where it's trading now. But then you take into account, you know, cash flow and what are they been spending on cash out or capex? Been spending quite a bit on capex. It's not amortization, depreciation. So I want to know how many stores they're building. I have to figure that out. I wonder if he said that in the article. Crazy thought. Maybe I should read the article. Okay. Expanding lease obligations over the past 18 months have compelled management to onboard debt of 200. Said that some of those funds were earmarked to repurchase shares on the way down. In total, 7.33 million shares worth 67 have been bought back since March, leaving 7 on the board to close. The company's held cash of 2.9 million, putting net leverage. So, I mean, it sounds like management's trying to bring share count down. The only problem is they're taking on all the debt. Like, if you're just transferring, you know, equity away and putting debt in place, it has the right ratio, and at a certain point, it doesn't make any sense. You're making things worse, to be honest. You know, especially in this rate environment. Not a great time to take on leverage. Expect to lose, and see, this is the thing too. Like, these guys are expecting it to lose 53 cents a share. And I know that's average, but like the stock market too, if it starts to turn, I mean, you know, you might. TJ's saying he's waiting to test the low. The other guy thinks it won't. I would tend to side with TJ there. I think it's going to break the lows. To be honest, I think it'll go right through them, unless they have some bigger turnaround here. But we'll see. It's always fun to think. And then we'll see. I have it on deck, so even with all that, everything being said, it's one of the ones that I am keeping an eye on. So let's go real quick and see what we had there. So cyclical. Yeah, last time I said an entrance would be around 3. So I'll update this real quick. But everything on mine now is screaming to bring the value down. And these things, and this is why, you know, if anyone's watching this too and you're looking at these prices, like, you can't go off any of these prices. This is, you know, just at a quick valuation when I'm looking at things now. And it's more warnings to me. What that tells me is that right now I think it's overpriced based on it's looking kind of into the future, which looks somewhat poor. You know, and then figuring out how cyclical the business is, where are we in the cycle, that kind of thing is going to help me hone in on a price like that. So don't think just because I'm looking at that's, you know, it's more, I'm going to put 216 in here as on my low side. And if I see it get anywhere near that, this is going to become very interesting. I'm going to dig very deep into this. That's the whole point. All right. I think that was good. We'll go on to 6 here. It's 9 o'clock. We got 2 more on the ticker list that I pulled up today, so I'll go through them. There's no reason not to. This one looks like it doesn't have too many years of data. So sometimes you get these days where, you know, you pull up some tickers and it's nothing that totally blows your minds, but the whole point is to get caught up with this and then go back to the ones that you have on deck, see if anything's trending near lows. See if there's any news or new articles about those stocks. Sometimes I'll go through some of my favorite analysts. I'll go, you know, when the hedge fund guys and all the investment funds that I look at, when they put out their quarterlies, and you can see what their holdings are and start looking at some of those companies. So when that comes around, we'll definitely do that too. So this one's only got 3 years, 12 million shares. It does have an insider. It's engaged in providing financial products and services through a single platform delivered via a mobile application. It's built an integrated, fully digital financial services platform. It's got extra cash, Dave banking, budget, side hustle, and surveys. Sounds like it appeals to the savvy investor out there. Generate extra income for spending or emergencies through its side hustle project. I would like to see how that works. I looked at this before and was not impressed. It's already got debt here. It's an app store. It's got no earnings. Margins terrible. It's got taken on too much debt already. What's its cash position here? It's got 42 in cash. It's already diluted pretty heavily once. And we do have in the recent quarter cash flow from operation positive. So, I mean, that's one bright sign in the dark glimmer here. It says 750. No way. No way. Not unless this totally changes around. So before I get real cocky and say it's not going to, let's just read on, see if anybody's changing the story here. Losses may extend and remain sticky. Goliath versus SoFi. Oh, okay. So we get both fintech companies set out to challenge traditional banks and then went public via SPACs. Oh, it's a SPAC. See? Where were you, NASCAR, man? You could have told me this was a SPAC. You knew about this. Difference in revenue per member versus Dave for the fourth quarter to SoFi. So SoFi is basically murdering them on a competition basis, and it shows in the price. So, and that's another thing too. It doesn't always work perfectly, but for instance, when I go to my dash here, what are we under dailies here? Let me see if I can. Okay, so here's Dave. I can click here, and the problem is the category software application, so it'll bring it up into here. But I can scroll through here. Hopefully SoFi's in here since it's saying it's a close company to it. No. Either way, that might be under like financial, because it's, you know, a bigger or different thing. It doesn't matter. But either way, so it doesn't work so great with this specific category. But if I'm looking at like oil or gas or something like that, I can pull it up, and that way GSIW is a Hong Kong financial service company that IPO'd 12/1. IPOs. All right. GSIW. Maybe I'll take a peek at it. See if it has any merit. You said it just IPO'd on 12/1? Oh, whoa, just on 12/1. Well, I probably can't say much about it, but I can look at a chart. GSIW. This is the 1 day. Let's see what intraday, how's it's moving here. We go on volume here, so a ton of volume the first day, but it's petered right off. Yeah, I don't know, because I feel like so many of these, it's like, you know, that's just, could be a money trap, man. Looks like quicksand to me. But I'll keep an eye on it. You said you got in at $4 at the debut. It's pretty good. I mean, just based on that chart I saw there. So I'm sure if you trade that properly, you probably make a handsome dollar on that. So I guess that leads me to a question, NASCAR. So you're saying that you got in at $4 on like a debut, or the debut. I don't know why I'm saying debut. So like what percentage of like a portfolio would that be? Like would you go heavy into that? You know, how confident are you in something like that when you're trying to trade something like that? Or is it just not really about that? It's just like a certain dollar amount that you guys go in at. Let's see here. So yeah, like I said, they generate cash flow, but as of now, it's just not proven enough for me. And because of the debt, I'm going to give these guys kind of a big handicap. Let me just check to see if there's any owners that I recognize. Is this how the heck did barbecue get pulled up here? Where the heck did that come from? Looking for Dave here, man. Dave, not barbecue. Is that why? Because it won't. Dave Inc. Why won't that come up? Strange. Dave Inc. It's not these guys. It's not this. Strange. I don't know why I can't get that to. I guess I can go just to here and I can look at. Just see beneficial ownership. So 5% holders. There's a few, and the executives themselves. One, Jason Wilk, owns most of it. Everybody else doesn't really count. Percent of total voting. So there's A class and V class. He owns all the V class shares. Gotcha. $37. Well, he's got a lot to prove. We'll give him that. So let me just update my Dave thing here. Well, it's been a minute since I looked at this. I rated it low before. Too young, needs more, high debt, poor fundamentals. Normally I don't put one in there unless I think it's go bankrupt. And I started that at a certain point, so maybe that's why, just because that was from like a year ago. Not that I think this thing's going anywhere, but I'm going to give it the $1.87 there. We're going to keep it pretty low. And then that way we'll see. Who knows? Could come back. It doesn't mean anything. It just... Alright, so that's all good. It almost... It's definitely too young, and then... It just needs like more of a turnaround type story is what I'm going to say. Sometimes I'll throw that in there. And actually, you know what? I just want to label it as a fin. And SoFi. That way, that's just a trigger word for me to remember, because then I'll remember that was the one that was competing with SoFi and kind of getting beat on all fronts there. At least according to that last part I read there. All right, last one here, AKA. It's online fashion retailer focused on acquiring and accelerating the growth of digitally native fashion brands targeting the kids. Company's brand share a common focus, seek fashion inspiration on social media and primarily shop online. Utilizes real-time data and consumer insights to identify latest trends. Okay, interesting. Prince's Poly Culture Kings, Pedal Pup. Sounds like something my daughter might be more into. All right, here. So once again, another one that's not too old. A lot of these are younger companies too. Still small too on the market cap side. Like some of these have been pretty small. Another one I've looked at. Looks like overall they're starting to generate a lot of goodwill apparently. I don't know if that's all debt. Doesn't look like it. Let's see what anybody's saying about this. So let me close some of these out again. Just don't want to, like I said, I'm not sure. I don't think it's slowing the stream down, but I'll keep up on trying to keep one down. Oh, you know, and then there's Courage and Conviction who's looking at this guy, and now I'm interested. But this is back on May 28th. Let's see what he said here. I feel like I looked at this back then. Things are getting heated Heat in the comments. It's been tough sledding into the small cap patch. 2023 returns market interests are exclusively focused on big cap tech. Comes to AK brands, argue part of the sum being worth well in excess of its current enterprise value. If you believe management can deliver 37 million of EBITDA, 15 million of free cash flow here. And it looks like Summit Partners has a big at 38 cents. They were worth 38 cents. That can't be right. Wow. Was there a reversal here or something? Maybe it was $3.88. It must have been diluted or something, because 38 cents, and this is May. Is this year? Let me make sure this isn't old too. No, it's from this year. Ugh, they missed the earnings pretty rough in November. What did he start off to say? High margin. Try the double black diamond ski slope on star chart. Yeah, I don't know where. 130 million shares. What he's saying that they had. He's saying this has 11 million. So yeah, so they did reverse. Okay. So it's fine. Just helps me understand how he was saying 38 cents. So but I mean, it's still a good call by him. I mean, what would that show on the chart then? If this guy's getting it like $3 here, it's a 3-bag right there. I think he can talk shit here. Nice job, Courage. That's well done here. Oh, sorry, man. Let me just get caught up on where you were at here. I see crackdown on the low flow IPOs in September after Terra Game changed after that. Oh yeah, okay. But back in the day, I'd request 6 figures, knowing that only 2 to 3% of the allocation would get filled. The danger is you get stuck in one. Gotcha. Where you get full allocations that you think will be a winner, and they dump it on you. At the time, the risk was low. Yeah, because that's the thing too. Is like, you know, because okay, I get you. Because that's kind of the way I look at things. Like, you know, if I'm already looking for this large margin of safety on things, and then I'm, you know, looking for the 50% returns, and I'm trunching out at that point too. You know, if it continues to run up, that's great. You know, it's already above and beyond what I valued it at. But I caught it on such a low amount, and you know, yeah, I won't be able to do it in this style for very long, just because the returns are pretty quick. And you know, you'll start to outsize some of these really small companies, so you'll have to move up in size, just because I'm going to take relatively large position sizes. The volume's just not there on some of these companies. You know, and maybe you can take advantage of that too. Maybe I can take advantage of that for a while. Try and get into something before it pops. I mean, you know, I'm not saying I have this huge amount of cash, but I can just see how if you can hit 50% returns on these, it won't take long, and you will start to have larger amounts of cash. But either way, I mean, the last quarter and whatnot looks pretty good. So, and if we dilute it, you know, I say $8 right now, so that's not too terribly off from, I think, probably what he saw. So, you know, good call on his part. I'd like to see when I last looked at this, because I'll be disappointed if it was sometime around there. Maybe I looked at it before and caught it after all that had happened, because maybe I've already looked at it. Wow, No, I said it was real cheap. So this was before, but this was in 831. So either that or my stuff that doesn't seem, that seems crazy. But I had it 59 cents. So that was before the reverse. And it would say that low. I have a hard time thinking it would say that low. But the price did recover drastically. So this leverage might have said it was more risky for me essentially. And they paid it off, so it also could just be too that this is one you should have been following closer. But I looked at 8, so where would they be on the chart? Oh, I guess so. It could have been in here. Could have been where it was already too high. But seriously, one to follow. I mean, you see a company slope off like this. What's the longer chart look like? Oh, it's just straight down. But yeah, somewhere in here, somewhere in there, it's got to get interesting. If you don't think it's going to go completely bankrupt, which rarely is it going to without bouncing. Especially if it's generating cash flow. I mean. Alright, so let's just finish this one up here. I had put power narrative. I'll take that out. I'll take out poor fundamentals as well. We're going to just say it needs more. And right now it's too expensive. But I'm going to bump this up actually. I like this a lot more than last time I looked at it. And obviously this is these, and that's what I'm saying. Like, you know, you could have looked at this before, and I know I said 30 cents, but and that's the thing too. Maybe last time I looked at it, you know, it wasn't quite at 30 cents where I was hoping to get in somewhere around there. So maybe that's why it didn't quite work out that low. But that's kind of what you do. Sometimes you miss out on things because I'm requiring such a large margin of safety. But I feel like it kind of filters out and, you know, only allows those slow pitches to come through a little bit better. But we'll keep that one on deck. That one's... I'm going to have to go through here and see what else I can see about these guys. It's not... I think that just searches with Google, so that's not what I need. I need, like, let's do business, because this will have investor relations in there, so it'll pull it up. See what their presentation is here. A lot of cool pictures, very cool pictures. Okay. I was gonna say, what's our plan here? Financial overview, balance, growth, profitability, sales, forward guidance between 575 and 605. EBITDA. So where are we at for the? Yikes! This is for 2023. Is that number right? Sorry, I just want to check what it says in here real quick, just to make sure those numbers make sense, because that seems ridiculous to me. Where's EBITDA? 10 million. Okay. What? Why does mine say minus 227? That seems insane. AQ 304. It does. Must have been a rough quarter. Is that what it says if you look at the other stuff out here right now? I jumped right because I saw Courage's name, so minus 658, yeah, in EPS. Jeez. May not be comparable to the consensus of minus 10 cents. Yeah, it's a little off. Interesting. Sorry, my daughter's been giving me every sickness under the sun from daycare. All right. I think that's good for now. What we can do is go to database real quick. We'll see if there's anything that maybe pops up here if I just filter a little bit of this. Let's go by. Let's just see if anything's. Yeah, you know what? That's probably gonna send a bunch of stuff. Yeah, Dayne's cheap at $1.30. That's within a 15 low. Yeah. What is this? Amplified energy. Yeah, but they're probably down the down. It's the other thing too. Is like some of the stuff looks good, and it'll be a commodity, and that's why it's taking the hit, because you know if we go to the dash here, oil and everything's just kind of down. One of these brings up a chart. Bring up a chart. Bring me a chart. So yeah, I mean we're hitting the year bottoms right now almost, actually. Which I know it's winter time and there's a lot going on in the world right nowadays. So all that can affect the price of this stuff. Although you would think it'd be going the other way, but what do I know? Is it and is it lights? You know, I know one of them is more from kind of like the States, it seems like, and then the other one is the heavier oil or whatever that they get from the other parts. I know it's not just the States, but so I could probably relook at those guys, but I imagine the story on that's going to stay the same. I don't think there's going to be anything crazy going on there. Can go back to let's just go here, and then AMPY, is that what it was? Yeah. Symbols. Yep. Attractive trajectory. Really doing the right things for shareholders. Current share price. AMPY here. Let's just see what they see what's just going on with the fundamentals. I'll probably 1170 on GSWI. Let me bounce back over to that for a sec. Oh yeah, I don't know. What are you saying? I'm really liking the 1170 watch for a break above and ramp up with increasing volume before. Yeah, I get what you're saying, but I just wonder if the volume's there. I don't know how you predict the volume when you have such little to go off of there. Yeah, I get what you're saying. You know, obviously, if it breaks that 1170, I mean, it is trickling up. You know, with what little you have to work with there. Lights are flickering. I don't know what's going on. Yeah, actually, I have this rated to be worth quite a bit more. I'd have to figure out where they are in terms of CapEx cycle here. I haven't been spending as much. Depreciation, all that's down, and on top of that, they're kind of killing the net income game here. Interesting. Who is the insider here? He's new on 11.7 and 11.8, so just about a month ago. I'd like to see a little more there, but it's not bad. See if anybody owns this. Sure. Doesn't really look like anybody owns it. No. There's no owners. One last thing to check here real quick. Just want to see if anybody's talking about it. It's the problem when you go on Twitter. I mean, sometimes it's great, but there's so much just nonsense. No, I'm not seeing anything that impresses me there. All right. All right. All right, NASCAR, man. Well, thank you for joining. I think I'm going to call it quits here. Pretty much gets through my day of things I was looking at and what I was interested in. So usually at the end here, I'll just hop back over to the dashboard and clean up here. This basically just kind of eliminates all the tickers that I had looked at during the day and kind of resets the spreadsheet. And then, like I said, the other guy that I usually do streams with, if you're interested, Johnny, he's on Thursdays. I think he usually does 6 to 7-ish. I'm trying to think if that's Europe or... Let me just double check that before I say that for sure. Go on my other screen here. Eventually you get too many streams here. I guess it doesn't say on there. Say on the actual stream here. I think it says on the actual stream. And I'll update, I'll make sure I put it somewhere easier to find just so I know for the future. But I'm pretty sure on here it says that the time he does Thursdays at 4 p. Eastern. So if you're interested, he'll be on there. Sorry, John, it took me a second to catch that for you, but either way. All right. So thanks, man. Thanks for tuning in. Anybody else, if you end up watching this in post, you got any questions or anything, please let us know. Let us know down in the comments if you guys have any questions. But we'll call it a night for now. Next time I'll have to get another beer so I don't run out so quick. Thanks, NASCAR. Yeah, you know, and it's one thing. You know, it doesn't really matter where in financial fall. I find it all interesting. You know, even if you're more on the trading side. And hat off to you, man. If you catch that and you end up doubling your money there, good on you, man. You ever do options? By the way, I meant to ask that at one point. I forgot my question. See if it catches up here in just a sec. But yeah, I think that's good. Just save everything, make sure it's all set. Because I had an error the other day. It's a real pain in the ass. Excel has some glitches that Microsoft needs to step their game up and fix. They've been around for way too long. Yeah, honestly, options just add in a whole nother thing, because on top of all the stuff you're trying to do and how you're trying to value something, then you got to time it too. It just adds in a lot of risk. You got to be. I find it. I don't even touch options unless I'm really confident in the timing of something. Oh yeah, I get what you're saying too. Yeah, so you're not really going to be trading options quickly. All right, man. Well, have a good night. Thanks for tuning in again. And we'll see you guys on Thursday with Johnny. And he'll have a stream. And then Saturday morning, we'll be doing our stream together. All right. Thanks, guys. Have a good night. Thanks, NASCAR.